Good morning, good evening, wherever you're joining us from. We're delighted to have you for today's webinar on the draft national tax policy in Kenya. We are hosting you from online, and we have participants from Kenya and South Africa. And we are extremely delighted that you could make time to join us today. So, hosting you is Cliff Decker-Hoffmeyer. It is a business law firm with offices in South Africa and Kenya. We are a full service law firm, and we are covering the issue of the draft national tax policy today. And on our panel today, we have very exciting and experienced panelists, and I'll introduce them shortly. We have Muthoni Kimani, who is a tax lead for WPP Scan Group. Muthoni is a tax professional with more than 12 years experience in tax across the region. She has spent more than 11 years in 2 of the big 4 accounting and audit firms in their audit, tax, and M&A practices. Her skill sets includes tax compliance and audits, due diligence, deal investment and structuring, group and whole cost structuring, business advisory, tax reviews, dispute resolution, operations improvement, and revenue management. As you can see, those skill sets will be quite vital in the discussions we're going to have today on the draft national tax policy. Muthoni is currently the tax lead for WPP Scan Group. WPP Scan Group is the largest advertising agency in the world, and she oversees all things tax for the business across the African continent. Besides tax, Muthoni is an engineer. She holds a degree in engineering and hopes to one day combine both her engineering background and tax. And she's interested in the enactment of policies and legislation that makes sense both for us as taxpayers and also that eases compliance. On the panel today as well, we have Maurice Ore. Maurice Ore is the Deputy Commissioner in charge of corporate policy at the Kenya Revenue Authority. He is responsible for legal reforms, stakeholder engagement, tax policy analysis, and technical interpretation of tax laws. He is a member of the Kenya Double Taxation Treaty negotiation team, and is also the vice chairperson of the National Treasury Fiscal Budget Team and a member of the Working Committee on ISPACs, Public Finance and Tax. Before he was appointed as the corporate policy head, he was responsible for leading the restructuring on the taxpayer audit program. He has also been very instrumental in the development of policies and structures to support taxation of cross-border transactions, particularly steering Kenya's implementation of standards required by the Global Forum on Transparency and Exchange of Information in Tax Matters, country-by-country reports, and common reporting standards. Very topical issues. He has been involved in all of these policies and the developments as they unfold. He's been at the center of it all. Maurice has vast experience and knowledge in domestic taxes that have been gained over a period of more than 25 years. He's an accountant by profession and a graduate of the University of Nairobi. Jerome Brink also joins us on the panel today. He is a director in the law firm of Cliff Decker-Hoffmeyer, CDH. He is in the tax and exchange control practice. He specializes in corporate tax, international law, and tax dispute resolution. He provides tax advice on a variety of commercial transactions, business activities, finance, corporate organizations, restructurings, disposals, and empowerment and share incentive schemes. His specializations extend to tax disputes resolution. He's advised clients on tax incentives, taxation of REITs, as well as PAYE, VAT, and taxation of trusts. Given his background in practice from South Africa, we'll get to understand different expectations and experiences that have he has seen from his jurisdiction of practice, and I'm sure those will be quite insightful for those who are listening. Lastly, on the panel, we have Alex Kanyi, who is a partner in the firm of CDH. He is responsible for the Kenya's tax and exchange control practice. He's also a member of the firm's dispute resolution and corporate commercial practice. Alex has worked in Kenya and Ireland for clients with operations in Europe, Asia, and Africa. He has extensive experience in tax structuring, tax disputes, restructuring, legal audits, company secretarial, corporate governance, and regulatory compliance. He worked for one of the big four audit firms in Kenya in various capacities and was lastly its regulatory services lead for a period of 6 years up to 2012. He also worked in Ireland as a manager in legal services, and he is now a partner in Cliff Decker Hoffmeyer. So that's the exciting panel that we have today, and we look forward to the discussions that we'll engage in. We will be looking at the draft, Kenya's draft national policy. And as you know, for Kenya's tax system has evolved significantly since independence. And we've had numerous pieces of legislation that have been passed, including those on income tax, excise duty, custom duties, VAT. And there have been attempts over time to diversify and increase the tax base so that the revenues that are being collected can also increase. But the current legislative system has significant problems, and this has resulted in reduced revenue collection or shortfalls in revenue collections as a percentage of Kenya's GDP. As you can imagine, even for us Kenyans, there's normally more month left at the end of the money. And the Kenya Revenue Authority is also subject to the same challenges and needs to find a way to collect more revenue in relation to our GDP. This has been exacerbated by the COVID pandemic that has increased the cost of living, that has increased the cost of doing business, while lowering the tax revenue. To try and address these concerns, the National Treasury has put together a draft national tax policy with the intention of creating a fair, efficient tax system that will promote equality in tax administration and that will ensure there's certainty and consistency in tax legislation and expenditure management. Overall, the aim is to have a stable economic environment. For any investor, stability is critical. So the development of a policy is aimed at looking at growth in tax revenue, providing a legal framework for implementation of tax incentives so that it's possible to monitor and evaluate the effectiveness of these incentives. It will address the issues of the frequency of tax law changes that make legislation unpredictable. And hopefully we can have more coherence when we're looking at future amendments to national tax laws. It is hoped to address and promote more efficient tax refunds to investors and other taxpayers in a way that makes it timely to receive refunds and simplifies the process. And largely, it is hoped that by having this national tax policy, we'll then be able to address complexities and contradictions potentially between different tax legislations. This will make it easier to compute tax, to file returns and interpret tax laws so that we can have an easier, make it easier for the investors to do business in Kenya. So that is the exciting topic we have for you today. We have a wonderful panel, panelists who are going to look at this topic. But before we do that, we'll have Maurice take us through the national tax policy. He's been central in its drafting. He's part of the KRA and will have useful information around what is driving this policy. and some of the concerns that are being addressed. And once Maurice is done, we'll then have a panel discussion led by Alex. So without much ado, would like now to welcome Maurice to present on the draft national tax policy.
Thank you, Sami. I think you have basically taken the words out of my mouth, because what you have actually presented is largely the content of the national tax policy. But ladies and gentlemen, may I say hello? It is my pleasure to join you on this discussion of the national tax policy. But I need to make a few clarifications. The journey of making the national tax policy, which is now in draft form, started way back in 2017. And the steering team is actually based at the National Treasury. So it is the policy is actually being driven by the National Treasury. But KRA plays an important part in terms of the input, because KRA being the collector of the government revenue, they have, I would say, a deep understanding of the challenges that they face as far as tax collection is concerned. So as of now, the draft national tax policy is undergoing review in terms of the proposals that came from stakeholders. The National Treasury had requested for a submission of comments from the stakeholders, and I can confirm that they provided very useful comments in terms of improving the draft policy. I believe that the National Treasury will be able to finalize the document within the shortest period possible to ensure that the issues that have been identified in that policy are addressed comprehensively. I don't have any specific date as to whether when that review will be completed, but I believe it is being given priority at the National Treasury. Ladies and gentlemen, I need not belabor the challenges that we face both as taxpayers and as tax administrators in Kenya, which I believe also is a worldwide problem. The only difference that I can talk of, and which I believe is positive, is the fact that the development of the national tax policy, the way we have undertaken it, is very open. Most jurisdictions actually do not make their national tax policies public. I can confirm that because during the development of this draft, we noted that it was almost impossible to get what other countries are doing in terms of development of the national tax policy. I can single out only African country that actually has made its national tax policy public. So I believe it is a plus for Kenya to have undertaken this process through a public participation. Yes, and I would like to also point out the issues that have been identified by Sami in terms of the challenges that we face in administering the tax as it is. One of the challenges that we face is the issue of tax incentives. Now, I'm not saying that the policy now will do away with the tax incentives, but basically the aim of the policy is to streamline the way the tax incentives are granted. We also face challenges in terms of the structure of our economy. Kenyan economy, like any other developing country, is dominated by the informal sector. And the main challenges that informal sectors face is the fact that due to lack of information within these sectors, taxing them becomes very difficult. So they fall within the hard tax sectors. Then how best then do we deal with it? It is not just to say that you go to the law and amend it. You need to have a policy that will guide that process. It's the changing business and we live in a digital age where businesses is no longer being carried out physically in a way that we knew before. Businesses have moved to digital platforms. And again, it's not just to say that we can go to the law and change the law and say that we tax you. We provide for a framework to target digital players. There has to be a policy guidelines. So overall is to find a comprehensive way of addressing some of the challenges that we face, including the ones I've mentioned. And there are many. The one has become so it means that the issues of tax avoidance and tax evasion becomes a big challenge. I wish to say that
Alex, I think Maurice's connection. Okay, he's back.
My apologies, I lost my network connection. I don't know where I stopped, but what I was trying to say is that it doesn't mean that Kenya has never had a policy in terms of that guide taxation. We have policies that guide our tax system, but the problem has been that some of these policies, first of all, are outdated because they have never been reviewed. And again, they are scattered. For example, we have separate policies for income tax, policies for VAT, excise duty, or even administrative policies, but they are not consolidated. So what actually you are trying to do in having this draft national policy was to ensure that all policies regarding taxation, whether they are related to legislation or administration, are consolidated and revised to align with changing circumstances. So what exactly do the policies contain? The draft policy that we have developed provides guidelines in terms of providing stability, fairness, and other principles that should govern taxation, including simplicity and tax neutrality. Those are largely what is contained in the draft national tax policy. Basic guidelines to actually make the taxation aspect clear and simple to the tax-paying public, It also provides guidelines in terms of people who are, in terms of legislation, specifically the people who make legislation. There are defined parameters in terms of what they need to do. For example, on issues of tax-based expansion, tax rates, issues of exemptions or tax incentives for that matter, and also, and more importantly, the tax system. Kenya has largely been has maintained territorial system of income tax, for example. But we need to take a deeper look at it and see whether it is working or not. And that policy guidelines actually provides a framework under which system will operate for taxes on income. It has also clear guidelines in terms of provisions on incentives, and this is not just for income tax purposes. It also touches on other tax regimes, including customs and VAT, excise duty, and other levies that are levied by government and other government agencies. Ladies and gentlemen, the focus of the tax policy, which we expect will be finalized in a short period, is to ensure that our tax regime is sustainable. As mentioned earlier by Sami, we, for example, have legislative provisions which have been patched up over many years. And if you look at some of our, for example, our income tax, which was actually the main driving factor for the tax policy, it has been patched many times, thus creating complexity in the tax system. And it is important that our policy will provide guidelines to ensure stability of the tax regimes so that the laws are not changed every year, for example, the way we are doing it now. In addition to the legislative agenda, the national tax policy also looks at administrative issues. And the objective of this is to ensure that the tax administration, the Kenya Revenue Authority, for example, is provided with clear guidelines on how they will collect, assess, collect, and enforce the taxes that they collect. So that largely forms the framework of our draft national tax policy. And as I mentioned at this stage, it is still under review with a view to consolidating the comments that have come from the public. I expect that once that review is completed, then we can move to the next phase of critiquing the now final document, which we believe that will be submitted again through some levels of government for approval and adoption. Ladies and gentlemen, I need not say much about the national tax policy because I expect that we are still going to engage to ensure that it is perfected and accepted across in terms of implementation. Otherwise, thank you very much, ladies and gentlemen.
Thank you very much, Maurice, for that presentation. We'll then move on to the panel discussions, and then at the end we'll have a Q&A session. So if you have any questions, please you could drop them on the chat, and then we'll see how we address those as we go along. So I'd want to welcome Jerome from South Africa. And perhaps, Jerome, for you, does South Africa have a national tax policy?
Hi, Alex. thanks for the opportunity and for having me, and for allowing me to engage in discussions today and provide a perspective from South Africa. So thanks, and good afternoon to all your viewers. So you are correct, and I think it was alluded to earlier by Marie. South Africa does not have a sort of national tax policy per se in the same form that has recently been announced in Kenya. And South Africa's tax policy has kind of followed a bit of a different path or a different perspective in terms of how it has been developed over the years. And I suppose there's two aspects to it. One of it, from what I understand, is also what happens in Kenya. Another one is a little bit different. So the first one is by way of setting up tax committees. And these are generally appointed by the Minister of Finance or the President, whatever the case may be. And they are given terms of reference where they are then sort of asked to investigate, research and report on very specific issues that are faced within the fiscal environment. The first one that I can remember at least was in the decade that I was born, which was in the 80s, and that was known as the Margo Commission. Second one was in the 90s, where Michael Katz, who's a doyen of commercial and tax law in South Africa, he chaired that commission, the Katz Commission. That was in the 90s. And the most recent one was what was known as the Davis Tax Committee, and that was chaired by the High Court Judge, Dennis Davis. So a few interesting points kind of that come out of these commissions. And the first thing is that the individuals that make up the committee are not solely from government. So there are representatives from SARS, being the South African Revenue Service, the KRA equivalent, National Treasury, as well as also the South African Reserve Bank, being the central bank. But in addition to that, the real core of the committee is from individuals that are actually outside government, Dennis Davis being the chair of the committee and being part of the judiciary. And there's then a number of other members that are academics, so basically professors at various universities across South Africa. And there's also some individuals that are in private practice at auditing firms, as well as sort of tax councils of multinationals. So definitely a very broad and diverse set of individuals. And so it gives a bit of a different perspective by including a broader set of individuals that are then tasked to research and report on the specific issues. So how it really works at the Davis Tax Committee, they set up these several sort of subcommittees, and they look into specific aspects. And some of those that were looked into were the macroeconomic analysis of sort of the different types of tax, personal income tax versus corporate income tax, and what percentage of revenue is being collected into each one and whether the balance is correct. So a more macroeconomic analysis view in terms of, you know, the sort of mix of taxes. And then there was obviously also some investigations and reports into, so similar again to the issues that are being faced in Kenya, into small and medium business enterprises. There was a review of the corporate income tax system, the mining tax regime, tax administration also was under a report. And then, of course, base erosion, profit shifting, which is something that has been very topical in the last few years. And sort of how the commission works is they obviously publish a call for comment, and there's a high level of public engagement. And I think at last check, they received about 433 submissions and held about 7 public workshops. So a high level of engagement. Generally, they would call for comment, comments would be made. They would then research and investigate it, issue a draft report, call for more comments, and ultimately issue a final report. And even though some of the research and recommendations are not necessarily binding and do not come to fruition, some of the recommendations do come through, and some of them that they've mentioned is some of the revenue raising initiatives in the annual budgets, which was sort of limiting the fiscal drag for personal income tax, increasing the top marginal rate for personal income tax, and those types of recommendations, as well as some of the recommendations on the wealth tax, where it was more measured, and they discussed raising or at least tightening the estate duty regime, which is kind of a wealth tax. So that's sort of how the Davis Tax Committee works, and they operated from about 2013 to 2018, about 5 years, and they came to conclusion towards the end of 2018. Then, of course, we have, and from what I understand, there's also a similar process in Kenya, and this is really the sort of what I refer to now as the ongoing process, which is really your annual legislative cycle. So it kind of starts every year at about this time of the year, which is about November. There's a call for comment to say from the public, can we get some comments on, let's say, tax policy issues, tax technical amendments, tax administration, a very broad range of issues. And National Treasury then holds workshops sort of in the beginning of December, and each of these issues that have been put on the table by the public are then discussed in a kind of town hall type of scenario. And they are very robust discussions, and it gives an opportunity really for Treasury to ask for clarification on certain aspects of the comments, but also an opportunity for the public and the people that have submitted the comments to provide a little bit more information and background in terms of what type of issues they are facing and what their proposals are. After these workshops have been done, National Treasury then decides, okay, these are the things that we want to introduce and these aren't, and in the budget in the following February, in what is known as the Annexure C of the national budget, these tax policy amendments are then discussed. Not a lot of detail given in there, more a paragraph on each type of issue, but it gives a sense of what government is looking at and what are they looking to change. Ultimately, then the bills are published later in the year, and again, there's another public consultation process that happens whereby further comments can be made in terms of the bills. There's public hearings in Parliament, and ultimately the National Treasury needs to then publish a response document which basically responds to some of the comments, and that's actually in writing. So there's quite a lot of feedback given, and that's actually given for public consumption, which is quite great. So that's sort of the two types of main ways in which tax policy is formulated in South Africa.
Thank you, Jerome. So I want to move to Muthoni, and then perhaps I'll also come back to you. Muthoni, if you had a chance, what is it that you'd add to the tax policy, learning from your experience from working across Africa?
Thanks, Alex. Hi, everyone. I think the things I would like to add would best be summarized as surrounding the 4 canons of taxation: certainty, economy, equity, and convenience. And a lot of these things, I know Maurice, who I respect very much, has really tried to kind of give us his overview when he was introducing the policy. But just to go down into a little bit more detail, like, to give examples of the things I would have expected to see. I would hope, for example, for a policy that moves away from income taxation and concentrates more towards consumption taxes. I think consumption taxes kind of help, they promote more equity and they're more neutral. The more you consume, you're the one that ends up, you pay, as opposed to kind of taxing everybody at source, and then you deplete their the money they have left over to spend. And closely related to that, actually, I would have liked to see inflationary adjustments on the PAYE bands. I think increasingly you hear that a lot of families sometimes live on less than $1 a day, and $1 in today's rate, $30 a day. If you make that convert into Kenya shillings, that's just about 35. Point at which we paid that livelihood, the little income they have. And I would hope that the policy making units at Treasury would like to, relook at that and kind of codify, expand or expansion of the bands rather that are subject to taxation. I would also would have liked to see that the power to increase periodically the excise should not be left with the carry I think it should be with the CS Treasury, and it should be data-driven. And the reason I'm saying that is because sometimes some of the pronouncements and the pressures that are granted, and we all know that, government spending and repayment of debt and things like that, I think that sometimes there's a lot of pressure on the regulator or the collector to increase collection. But then at the same time, that means if the commissioner has power to arbitrarily increase some of these taxes as and when they feel like, in order to meet short-term gains, the revenue targets, I feel it's unfair on a lot of taxpayers and really just across the economy. I feel it's a bit unfair. And then I would have liked to see, clear policy on incentives, which I would expect to promote FDI. And closely linked to that, I would have expected to see, or I would like to see in time, a framework, for example, for transition, for measures, especially for people who, or companies or investors who already have existing agreements with the government. And the best example I'd like to give, for example, would be like around we've seen like the power sector and the changes that have come in around there over time, over the last several years. And I think in the very recent past, there has also been cancellation of, say, some incentives, which when you're doing like a business model and projections, and you project, say, your project over 15, 20, 25 years in order to recoup your capital and make some profit, I think when the law changes so frequently, and I know Maurice already addressed this, when the law changes so frequently, there isn't much certainty. And I think that does drive away investors and businesses from the country. And then I do know, of course, that it's tough for the revenue collector, but I mean, if you kill the goose that lays a golden egg, then even the little that you are collecting is gonna end up getting depleted.
Muthoni, actually sticking with you on that particular point, recently we've had pronouncements by the new government, saying that we want to get to 25% of GDP, and Maurice's and KRA actually being pushed to collect 4 to 5 trillion in a year. So do you think this has any impact on our tax policies?
Yeah, it absolutely does, because as I just said, sometimes and I understand the regulator, if the Treasury and the President are asking for more money to fund whatever, whether it's development or repayment of loans or recurrent expenditure, etc. It does put pressure on the regulator to have some sort of knee-jerk reaction. And I think that the things around, for example, the excise duty is one of them. I think, however, though, that should not be how we drive tax policy. I think that we should find definitely a balance between lawmaking and obviously fostering a healthy economy for businesses to thrive. And the thing is, the key question really is, where is this money coming from? If we're going to kill businesses, if the businesses are actually not making any profits, and then or barely turning over any income, they're not even growing, they're actually probably contracting. If, for example, we keep taxing the same old income, like those informal employment, the businesses that are actually registered, but we don't expand the revenue base to the informal sector, and Maurice already alluded to this. If we don't do that, then we're going to end up, more families, for example, will not be able to support themselves on the incomes they have, which means they have less spending power, which means they, again, go below the poverty line. Less businesses will be able to survive. Actually, the BRS statistics, the business statistics for this year, in the financial year 2021-2022, 1,365 businesses have shut down. The year before that, when COVID started, 2020-2021, 2,540 businesses shut down. And overall, and the year before that, it was 1,255. Over the last 5 years, it's been 6,587. We know of businesses, and we see that in the news, where multinationals are exiting the market because they're saying it's too tough. We've seen businesses that are shutting down for different reasons, and I'm not saying this is just fully tax, but we all have to acknowledge that the regulatory framework and the regulatory landscape may not always encourage businesses to to stay if they're not serving a profit. At the end of the day, everybody wants to make money. So tough job for the regulator, but I think that we should invest in like long-term policy that encourages long-term gains and not knee-jerk reactions just for short-term gains.
Thanks, Muthoni. I think I want to bring on Maurice back. Having had the comments from Muthoni and perhaps from also Jerome, how is our public participation like here in Kenya? Is it our habit to always come late, or do we participate well when policies are being developed? Maurice?
Thank you. I want to say that in terms of public participation, and I'm happy that our public participation is very well much aligned with the South African one. The process is basically the same. Now the question as to whether our public actually participate in those opportunities, I've got to say that when the Constitution of Kenya 2010 was enacted, which actually now requires that every instrument must have public participation. There has been what I would call a gradual intake. Like on this matter of national tax policy, I'm happy that there was significant participation from the public. And I hope that even the comments that Madam Muthoni has made, she actually shared with the National Treasury in terms of input into the national tax policy.
Maurice, we can actually hear you. Sorry, Maurice, hello? we can actually hear you better without your camera on. I think the camera is okay. Maurice, yeah, we can hear you. Maurice, you could remove video at least so that we hear you better.
I wanted to just touch on a few issues that have been mentioned by Muthoni, some of which go into the content of the national tax policy, which, as I said, is still being reviewed. Discussion. That is the taxes and indirect taxes, specifically consumption taxes, that is VAT, and the excise. Some of the benefits are better managed through a very careful balancing of the two. I would say that as much as Sorry, my internet appears to be very unstable. Can you hear me?
Yes, we can hear you now. We lost you a little bit.
Yes, I noted. So I was saying that the balancing between consumption taxes and taxes on income has to be something that has to be thought very carefully. One of the advantages of taxes on income is it has progressivity. So it means that the main impact is on income redistribution. On income taxes, actually the graduation of the rates, and which I think Muthoni also talked of in our subsequent issues, is progressive, such that the people with lower incomes will pay less taxes, and those with higher incomes will pay higher taxes. So when you go to the fairness principle, then you find it is a bit fair. When you go to consumption taxes, let me talk of VAT. Irrespective of your level of income, when you buy something, the rate is basically the same. It is good practice to avoid multiple rates. So, for example, in Kenya, we have 16% rate of tax. But whether you are poor or rich, assuming you buy our staple food, for example, maize flour, currently we have zero rated it. But if it was at 16%, so the person who is poor pays the same amount as the person who is rich. So it lacks that fairness and equity. I believe the angle from which Mudhoni was addressing this is that when you lower taxes on income, then you leave more income for disposal, that is for investments and even savings. But in a developing country like Kenya, we find that the tilt towards consumption taxes actually disadvantages the lower color of people. So we have to carefully balance the two. The key issue is to balance so that we have money for investments and we have also money for consumption. So it's a tricky matter. I agree with you. It's a tricky matter. It's a
Thanks, Maurice, for those comments. Thank you very much. Maybe to you, Jerome, having had the comments in terms of what is happening in Kenya, are there any key challenges or lessons that you believe Kenya could learn from South Africa?
Thanks, Alex. Yeah, look, I mean, the interesting thing before I speak about the challenges is a lot of some of the issues that have been spoken about today by Maurice and Mudhoni. We face the similar types of ones in South Africa, so I think we could probably learn from each other quite a bit as well. For example, you know, the perennial question of trying to tax the informal sector and sort of widen the tax base is something that in South Africa we've tried to grapple with for many years and haven't quite got it right just yet. And it's absolutely, you know, to widen that tax base and to get more people within that net is certainly a challenge, and it's something that we could probably share ideas on. Some of the other ones as well is, of course, tax incentives. And again, in South Africa recently, we've had quite a big focus on tax incentives and actually reduced a number of them because they don't necessarily encourage the right type of behavior. But of course, you know, incentives that are done properly and implemented properly can also be wonderful tools for growth, you know, growth initiatives. So it's really about trying to strike a balance. And again, sharing ideas would be wonderful. And I think sort of the last aspect just to touch on is the consumption versus income taxes. And I hear Maurice and Mudhoni, and I agree 100% with Maurice there. It is a very, very difficult balance to strike. And I think South Africa has a very high rate of income tax compared to other countries. And I think it's about 34%, the latest stats that I saw in comparison to the African average, which is more or less around about 20. And again, it's a fine balance of trying to strike because consumption taxes are a lot easier to collect and administer, but of course then they don't have the progressivity that income tax has. So a lot of these ideas are certainly something that it would be wonderful to learn from each other even more from. I think in terms of some of the challenges, I think, again, some of them have been mentioned. I suppose with the ongoing process, you know, the persistent issue is that tax law changes too often and there's uncertainty. I mean, in any given year, there could be an amendment to an amendment before the amendment has even come into being, which is somewhat confusing and creates a lot of uncertainty. And I don't think that's good for business. So that is certainly a challenge. And I think that's a challenge that not only South Africa is grappling with, but many countries are, because simplifying your tax system is a great theoretical idea, but you really need sometimes difficult rules or complex rules to deal with a lot of complex sort of scenarios. And again, it's about trying to strike that balance. And then I think on the last sort of aspect, which is the Davis Tax Committee, I think it's wonderful that they had different perspectives from not only government, but also from, you know, the judiciary and academia, etc., that were actually made up of this committee and drafting the reports. And that independence then obviously creates good perspectives and a good diversity of ideas. The downside, of course, is that they don't get as much support and their recommendations are not necessarily binding. So again, it's about trying to strike that balance between the two. And those are just some of the sort of challenges and positives, at least from a South African perspective.
All right. Thank you, Jerome, I think for that. It's comforting to know that you also have the same challenges as South Africa, you know, as Kenya. And we can also learn from each other. So I think I want to open it up for our participants. If you have any question, please let us know. You could type it on the chat and I'll direct it to the relevant person, or if you want to ask a particular panelist, so please feel free to ask the question. Thank you.
Alex, we've got the first question in the chat.
Please go ahead to read out.
Kindly share some insights on how taxing wealth has been achieved in other jurisdictions like SA.
Jerome, I think that's yours.
I'll take that one. Yeah, so this is a very sort of multi-layered, complex question, because there's a number of issues. Firstly, what is wealth? You know, that's the first question you have to unpack, is what exactly is wealth? And secondly, what types of taxes are there that are already taxing wealth, and what would a wealth tax potentially look like? And these are sort of some of the issues that when the Davis Tax Committee did their report into it, these are some of the things that they sort of raised. And if you look at it, at least from a South African perspective, and what they mentioned, and why they sort of were a little bit measured in terms of not introducing a wealth tax, is one, the personal income tax rate is already progressive in the sense that, you know, the more you earn, the more income tax you pay. Two, you have a transfer duty, which is essentially a duty on the disposal or the purchase, sorry, of immovable property. And in a sense, it's a bit of an indirect wealth tax, because if you're purchasing large immovable property, it's kind of you putting your wealth and crystallizing your wealth into a specific asset. And thirdly, there's of course estate duty. And estate duty is, and there was actually a recent amendment a couple of years ago where it was beforehand 20% flat rate, and that amount was actually raised for, I think it's, correct me if I might be wrong, but it was if your estate was above 3 million rand, you then paid estate duty at 25%. So it was also sort of, you know, starting to use that progressive system of taxation. So I guess the thing is that at this point, there's actually a number of taxes and tools that are being implemented that sort of play a role as a wealth tax. And that's why I think they were a little bit measured in terms of introducing another wealth tax, as opposed to sort of looking at what is existing in play.
Thanks for that. Jerome, I think another question to you is whether South Africa has special tax courts, and then perhaps Muthoni will jump in
Yes,
to comment on whether tax courts will help.
yes, no, absolutely. And again, this was something that I also picked up when I read the Kenyan tax policy, another similar type of issue that we also faced with. So South Africa does have special tax courts, and basically how they work is the judges from the High Court, the normal High Court, are seconded to the tax court from time to time, where they sit, and they then obviously pronounce on tax matters. And I think one of the issues, and I see it was raised in the Kenya tax policy, what has been raised in some of the public discussion, is the fact that you know, in South Africa, you also have a competition court, you have a labor court, so you have very specific courts for specific issues, family court, electoral court, but a lot of those courts have specific judges that are dedicated to that court, so you can kind of develop jurisprudence a little bit more consistently and with a bit more greater certainty. And unfortunately in South Africa, sometimes the High Court judges, it's sort of, well, there isn't at least a transparent process in terms of how they are appointed. And that would be certainly a wonderful thing to have, in the sense of trying to have a bit more transparency in terms of who sits at the tax court, in the same way that you have that for the competition court and the labor courts, etc. I think that would go a great way to improving tax jurisprudence.
Modoni, so as you also answer whether we need special tax codes, and that is something that is already being suggested within the draft policy, you could also answer this question from Eric, who is asking, what's your view on introducing a standard rate for exported services from Kenya, and whether this is a new policy from the Kenya government. I know that matter is in court, so but
Yeah.
just proceed.
Yeah, so on the issue on tax court, I think definitely we've seen a lot of improved faster processing of and decision making with regard to tax disputes when the tax tribunal has been constituted. But once the matter is appealed further by either of the parties and it goes to the High Court or the Court of Appeal, etc., it takes so much longer. Some cases, because it's mixed up with all the other cases, and sometimes it can take as long as 5 to 7 years to even have a matter heard and concluded. And I think that definitely we should have specialized tax courts. And even if, for example, we want to put a threshold so that the bigger matters that might impact maybe on interpretation of a constitutional matter, that's fine. But at least for cases where the materials are small, above, on a threshold, you can have them concluded faster, because we've seen businesses that, if the dispute doesn't seem like it's too huge, but then you're thinking about the filing fees, the cost to pay an attorney or a tax advisor to take you through the whole process, the time benefit, to get your case concluded, then it can dissuade you from pursuing a matter further, even though, for example, you really shouldn't have to have, maybe the tax will not even due and something like that. So yes, definitely specialized tax courts, even if it's using a threshold for smaller matters, so they get faster conclusion. With regards to VAT, this matter came up earlier in the year. When the budget was read in April, the VAT on exported services was not up for discussion, but somewhere in the second, third reading, someone sneaked it in the back end and reclassified VAT on exported services, which were previously exempted in the last 1 year for the first time in a very long time, were classified by exclusive exemption from the standard rated list, from the zero rated list and the exempt list. So by virtue of not being listed there, then that means they're standard rated. And what that has happened for us, for example, as a business, is with our operations across the region, we find even just recharges, we have to charge our subsidiaries, so Kenya, Uganda, Tanzania, Nigeria, South Africa, we have to charge them VAT on exported services, which is not in line with the international best practice on consumption and destination of services. And I think that's one thing that the KRA really need to look into. And I hope in the Treasury, in the next budget making cycle, maybe in April, we don't have that. I think it has increased costs for us as well as a business, because when we bill the other person, they cannot claim the VAT that we've charged them from here, for example. And that increases our overheads, obviously. So I know that matter is in court, as Alex has mentioned, about the unconstitutionality of the same. So we'll wait to hear what the courts decide. In the meantime, again, going back to the issue of the cost, it's taking a while to have that concluded. And in the meantime, of course, the regulator is busy collecting and has been collecting since July. We're in month 5. They're collecting 60% of everything you've exported, which I feel is a bit unfair and doesn't go along with the principles of equity.
Thank you, Mudhoni. I want to bring in Maurice. We quite have a lot of questions here. I doubt whether we'll be able to go through all of them, especially now that our time is already up. But Maurice, maybe I could pick the question from Benjamin Kelly, who asks, do you believe that the draft national tax policy will achieve the intention to expand the tax base in Kenya?
My answer is yes. And this is based on the fact that if you look at it, it actually considers deeper issues that have actually been a problem in terms of tax-based expansion. And I think we are optimistic that it will, unless maybe the person asking the question has reservations, which I would be happy to hear. Thank you.
Thank you, Maurice. I think I'd want to bring this to a close. It's been quite interesting engaging with all of you, our panelists and our participants. Thank you for making time for this particular webinar. We hope to have many more, so look out for the invitations for such webinars, and also encourage your colleagues to join. It's been nice to hear what South Africa is doing from a tax policy perspective. It's been nice to hear experiences, from a Kenyan perspective, and what is happening in Africa, with Mudhoni leading us with that particular discussion, the consumption tax versus the income tax discussion, and even the responses from the Revenue Authority. Even the comments around amending an amendment even before the amendment has come to force, and it's something that we all deal with, as tax practitioners. However, I'm encouraged with the policies that are being developed, with the policy that is being developed by the National Treasury, and I know should there be another chance for all of us to then contribute to that particular national tax policy, then we should actually take advantage if we are given that particular chance. As I close, just to remind everyone that also the National Treasury has invited comments around the Finance Bill 2023, and they're asking for any tax policies that you'd want them to consider, and I'm sure Maurice will be happy to receive all your tax proposals. The deadline for that is on the 16th of December. So just make sure as you slowly switch off towards the holidays, don't forget that the National Treasury is actually waiting for your comments on the tax proposals for Finance Bill 2023. So with that, we come to an end. With the questions that we've had, we will attempt to see if there's a way we could respond directly to you. So also thank you to the participants for sending in the questions, and also for the team at the back who've helped us to put out this particular tax webinar. So thank you all. Enjoy the rest of your day, afternoon, wherever you are in the world. See you in the next webinar. Thank you and bye.
Thank you, everyone.